Fellow traders, 'tis I, the Rumpled One, coming to you on Friday, September the 26th. The year's 2025. Let's talk trading. Weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. I hope you had your risk management in place this week so you didn't lose more than you were willing to lose on any one single trade or during any one single trading session. So we look at the week. For the pound, we are 57 pips below the weekly open. Notice we almost hit that pivot, and then it turned right back around and dropped like a rock. 134 off that high and 79 off the low. We zoom out to the month. We're 90 pips below the monthly open, now 91. 324 off that high and 79, now 80 off of the low. Notice once again all the weekly open gaps have filled according to the dashboard. Notice we are below the opening range for the week and the opening range for the month. Yesterday we broke through the opening range for the low, and we're now 43 pips below that low, but as you can see, it was a lot lower. And one thing to note, price opened at 33.36, hit the launch pad, and is at 40 and is now moving upward. For the year, 893 above the yearly open, 385 off the high, and 1304 off the low. We had some inside bar action too this week. In fact, it was really good on the daily. As you can see here, we had an inside bar 10 days ago. We got back into that range on Tuesday. We dropped, actually it broke out of the weekly inside bar from 4 weeks ago. We broke out, fell back in, fell through that daily, and as you can see now we're 121 pips below that daily inside bar. And for the week, we broke through the weekly low yesterday, and as once again there was a few pips to be had there. Right now we're only 13.8 pips below that weekly inside bar low. So you can see there was a handful of inside bar action, but the pound really proved to be nice this week. And this type of trade, you're not going to get an entry every day. But when you do, if you get to take advantage of it, you can see it can pay off big time. For the day, even, I believe we had some red news, only 77 pips of range. The pound clocking, the pound New Zealand, or what I like to call the new beast, clocking in at 155. Notice that the pound yen, the beast, is slightly over 200. And the dollar yen got close to that 150 mark. Buy zone traders, there was some action a few hours ago. Came down, hit that buy zone area and took off, which was in the launch pad. Looks like the red rats should be ready to feast, but there's a lot of movement. If you look back here, that a lot of ground that needs to be made up possibly. So you might want to be careful if you're looking for a short here. Bambino Flex Indicator said short. Pivot Trading Plan called for a short, but at the pivot, it's taken off. So once again, these videos are for educational purposes only. So you can see here, as I like to say, you can trade these plans, these methods, these systems, but the thing is, it's not going to work every time. And that's why we have risk management in place. We've taken out the monthly pivot. We missed the weekly once again, and we took out the daily pivot. we had a missed pivot 5 days ago. So we've got 2 trading days left in this month, and we've got 1 missed pivot for the month of September so far. Missed daily pivot, that is. In and out of that lower wick zone, once again, being in the launch pad, you can see price moved up, pips to be had, gave you another opportunity here, and then took off. For the week, 213 pips, high minus low, 66th percentile. Pretty respectable. As you can see here, we've got a lower high, lower low. So we did not break out of the previous high, but we broke out of the previous low by 140 pips. Right now for the rats, high minus close 133, close minus low 81. For the weekly crossover traders was definitely huge. High minus open happened first, and then open minus, and that was 76 pips. Open minus low followed with 137. So you don't get these horizontal line trades, these particular ones, every day, but when they do come up, that weekly open crossover, it's something to look at. Not to mention, we also had monthly open crossover. Let me just switch over here. And so you can see here, we crossed that open in 171 pips. We did break out of the previous month's high by 132. Price action chart, you can see here, once again, we had a turn trade or flip-flop box here, turn trade indication in the launch pad, and prices definitely just followed up. Indicator 2, aqua the whole time. Right now we've got a high slow trigger. One thing to notice on these trades, when price is moving up, see how many times you get a 2 bear candles in a row, or if price is moving down, how many times you get 2 bull candles in a row, because that can be an indication which way price is really moving. And you can maybe avoid getting suckered into going the wrong way. So here we had price moving up, and you see there's just no bear candles at all. All of a sudden you got this one, and so you could have gotten suckered here. So it's like, well, wait a minute, it's not making lower lows. So then you can see here, now you get a bear candle, you get a doji, you get another bear, but that didn't prove much. And then here you get a bear, another bear, and it's all of a sudden off of that 1 ball, 3 ball level here. You can see price consolidated, and then it's like, okay, now you see these breaks, and then you get the bear candles in a row. And then you start to look for, maybe it's going to reverse. You see here, you get a bull candle, and then followed by a bear, and it went down a little bit, then a bull. Okay, so now we're back going the other way. And that was off of about the 75 line. You can see here prices breaking out. So that's just something to be aware of. Is just take a look at the chart, and you can see it kind of does leave these clues. So see here, it's going up, but only 1 bear, going up, but only 1 bear, going up. It's got this bear that was like almost a fake out. Even though I hate talking about fake outs, because it did break, but not for much, and then all of a sudden price turned right back around. And I see an open gap right here, so price probably needs to come back to that level. So year-to-date cumulated range did not move in September. range by month. We're at 403. We've only got 2 trading days left. Let's see, can we beat okay, we beat June by 3, so we're not the lowest, but we're second lowest here in September. Let's check that against the ATR percentage. We're at 82, which is the lowest for the year. So we'll see what happens these next 2 trading days. And close minus open year-to-date percent. So see, we've dropped down to 7.21. So I remember back here we had a high of over 10. So we've given back 3 percentage points. And that's one of the reasons why you can't be greedy. It's like, oh, maybe you wanted 11, but if you try, sometimes when you try and push, the market just takes it right back. So take a quick look here at the month. Higher high, higher low, but we're below the monthly open. So for the week, previous bar was an outside bar, price turning down, sellers strong control. Still wanted to fade that pivot buy to 135.53, but we did not hit that pivot on the week. And we did cross below that weekly open. On the day, buyers strong control at the moment. And we have a lower high, higher low. So inside bar day, something to be thinking about next week. We're gonna have, if this continues to be an inside bar, prices between the wick zone. So fellow traders, I hope you liked the videos this week on the psychology, because the more I talk to traders, in fact, I talked to Stan yesterday. Shout out to you, Stan. And I talked to Walmall, a few other traders. It really goes to show it's the the profit is in you, not necessarily the systems, because the profit were in the systems and the methods. They would just be automated. You just turn the computer on, walk away, and then, check in to see how much money you made. But it just is not that simple, in the sense that you can find a solution outside yourself. Now, maybe there are some people who have some robots out there, or EAs, making their automatic trades, and they can just walk away. I mean, when I was trading the buys with equities, I had Auto Avery and the Auto Avery portfolio manager, and that was hands off um, for the most part. But automation doesn't mean unattended. You still need to watch what's going on, because one bad trade can really do a lot of damage if you don't have the proper controls set up. And that's why having your stop loss with your risk management in place is so important. As Walmart likes to say, preserve capital. So it's kind of hard when you're in a losing trade, and to just exit that trade because you don't like losing. But it's like, well, you want to keep more of what you have. So, and if you stay in it, you might start losing more of what you have, and that's all about preserving capital. It's really a shift in mindset, and it's something that each trader has to work on for themselves, and nobody can do it for you, because it's not what you trade, it's how you trade it. So, everybody have a fun and safe weekend. And when you come back to trading, drain the banks. This is the Rumple One, over and out.